uh, factors that we use. One of them we call as a eco-efficiency factor or margin of safety. It's basically that a large number of companies state something and do something else completely. Right? If they are doing what they state and they have a track record for it, we rate them higher on the eco-efficient. Liquid hedge fund, we are long short equity, and we basically focus on mispriced balance sheet resilience. So, as we call it, mispriced balance sheet resilience means that balance sheet is quite resilient, but the market is mispricing that. We focus on using basically a octo-factor model. So 8 factors that we use. Those 8 factors are basically the standard, Carhartt, Pharma French 6 factors, plus we've added 2 additional factors, which are largely, I would say, non-financial risks, which can tip the equation and can generate massive returns. So what are those 2 non-financial factors that we use? One of them we call as a eco-efficiency factor or margin of safety. It's basically that a large number of companies state something and do something else completely. Right? If they are doing what they state and they have a track record for it, we rate them higher on the eco-efficiency factor. If they are not, so as an example, take Airbnb, great ESG scores. So if you will read their ESG report, if you look through their sustainable yes and whatever, you will think that they are a sustainable business, but fundamentally it's an unsustainable business in a sense. They thrive by chasing renters out of the market. Right? Short-term rentals, that is how the business model works. So irrespective of the score that they might get and their rating, etc., they are an unsustainable business. For efficiency, we would rate them very low, and accordingly, we might actually shock them, right? So that's one side of it. The other factor that we've added onto our investing model is called integrity and so in the previous sessions, I've mentioned that it is it's a fact that more than 90% or 93% of all listed stocks, companies, you find that they are not practicing integrity. Their financial health is not what it states on the financial statements. So, what do we mean by saying integrity? So, looking back at their earnings over the last number of quarters, did they deliver what they talked about? Are they truthful about their forward look, and thereby are they delivering on it? Do they have a track record of delivering it? That is one side of it. The other side is we use a number of custom models in order for us to understand while the financial statements are true and fair as per the accounting standards, is it fair to an investor, right? So that's the other side to what we look at. And again, we use basically a 1 to 5 sort of a rating model with respect to the integrity and health factor as well. So if we have a stock that is performing really well but has low integrity and health factor, then it'll probably sit on the short book. Now, the way the portfolio is constructed, I've shared a link to our manifesto. The way the portfolio is constructed is we have an anchor portfolio, which is essentially the solid performers